What's going on, Z community? It's me, Tamer Aziz, and today we're making a brand new video about the PDT rule. Now, if you're a new day trader in Canada, this video is going to be especially useful for you. Some key points that we're going to be talking about are what the PDT rule is, and when it comes down to the PDT rule with different investment brokers, and what does the PDT rule have to do with different types of investments. Stay tuned and be sure that you hit that like button and subscribe to the channel because there's going to be a lot of good stuff. Now let's get on with it. Now, the PDT rule is also known as the pattern day trader rule. It was basically made by the New York Stock Exchange and FINRA, and it basically limits you if you have less than $25,000 within your trading account. Now, let's be real, nobody really cares about history that much, so I'm not going to dive in too deep into the history of the PDT rule. But I think it's safe to say that the PDT rule be sus AF. And honestly, I don't know why we haven't started a movement to kind of cancel this. Actually, speaking of that, yo, you know what, Z community, go in the comment section right now and make a hashtag for cancel PDT rule. I'm gonna be putting that first, so let's get that train going. But let's get back on track. Now, why does the PDT rule exist in the first place? Chances are this rule came into effect because they wanted to put a regulation, or they wanted to put a limit against new day traders that are coming into the market. And it doesn't really make any sense because whether or not you're a beginner, you could just have a lot of money that you've saved up and then start trading. And it just doesn't make any sense at all to me. Like, if you're a beginner day trader, you're a beginner day trader, bro. The amount of money that you have does not have any say with that at all. Yeah, but that's basically why the PDT rule is a thing in the first place. Now, to understand how the PDT rule actually works, you're gonna have to understand how a Tim Hortons rewards card works. Yeah, you heard that right, a Tim Hortons rewards card. Yo, I'm talking about one of these bad boys right over here. Yup. So essentially, the reason why I'm bringing up the Tim Hortons rewards card is because I don't know if you guys remember when this thing came out. Essentially, they had this little incentive to get the card in the first place. Essentially, how it went is that Tim Hortons said if you got one of these cards, you can essentially get a donut or a coffee for free. That means you could literally go into the Tim Hortons, ask them for a new card, sign up online super quick, and then get yourself a free coffee. But let's just say that after your coffee, you take in, yo, I actually kind of want a donut too. So you go back into the store, you ask them for a brand new card because you lost it. So then, you know what, they end up kind of like brushing it off and they're like, okay, here's a new card. You sign up for the Tim Hortons card again, and then you end up getting a donut with your coffee. But if you realize that you wanted another coffee because you still need that fix for the morning, you decide that you're going to go in for a third time. What's going to happen then when you ask them for a new Tim Hortons card? That's right, you're probably going to get kicked out of the store, if not banned for the place. Now, the reason I'm bringing this up is because the PDT rule works in the exact same way, where the coffee or the donut that you're trying to actually get are the day trades that you're trying to fit in, whereas the Tim Hortons place is the actual stock exchange itself that regulates new day traders. Now, before I break this down into more detail so that you kind of see where I'm coming from, we first need to actually look at the definition of what day trading is and what a pattern day trader is, as defined by FINRA and the New York Stock Exchange. So a day trade overall is when you buy and sell a stock in the exact same day. For example, I end up buying an Apple share at $250, and then in the same day, I end up selling it for $252 to make a $2 profit. That would be considered a day trade. Now, a pattern day trader, on the other hand, is somebody who does exactly what I just explained, but does it more than 4 times within a 5-day trading period. So if you did that exact same Apple trade that I just talked about, but you did this 4 times, and your account size is less than $25,000, you're walking on thin ice, my G. And let me just clarify, by trading days, I'm not talking about like an actual week where it's like Monday to Friday, that's pretty much it. No, I'm talking about a 5 actual trading day period. For example, if you ended up placing 4 day trades on Thursday and the Friday, this does not mean that you're gonna still have those day trades being reset on the upcoming Monday. This means you're gonna have to wait until the next Friday, or if you're lucky enough, the next Thursday, for you to be able to place your next day trade. But if you decide that you want to be a savage and you want to rebel against the New York Stock Exchange and FINRA, then I'm gonna change the logo that's on this shirt, and I'm just gonna post a picture of your face over here that just says free up. because you're basically going to be banned from day trading for 90 days. Yeah, free up for real. Now, chances are I'm not actually going to switch up this logo because most brokers out there will actually freeze your account from placing any trades whatsoever. Whether that you want to make it a long term or even a day trade, they're just going to put a freeze on your account. When they put a freeze on your account, this means within the next 5 trading days, you're going to be able to go back to normal. And if this is not clear enough, this means that you are not going to be banned from trading at all for 90 days because your broker is nice enough to let you off the hook. But on the other end, if your broker doesn't really like you and they don't like their clients whatsoever, they're going to let you take that risk. They're going to let you take that 5th day trade. And guess what? That's when I'm going to be switching up this logo because you can't trade at all for 90 days. So you're probably wondering a few things right now, and probably the first thing that you're thinking of is, yo, is there a way around this? And you know what? There actually is. So to my knowledge, there are 2 things that you can do to actually avoid the PDT rule. The first thing that you can do is have multiple accounts with different brokers. And the second thing that you could do is open up a different brokerage account internationally. Now, for the first one, which is having multiple accounts with different brokers, I know a couple of people that are in the States who have been able to get away from the PDT rule. And basically how this would work is that you would have one account with one broker. These guys give you maximum of 4 day trades a week, okay? So you got that one account. Then you have that second account with a completely different broker, and they will give you another maximum of 4 day trades within the week. Now, if you ask me, I think 8 day trades in a week is far than enough, especially if you're well versed in the day trading world and you have well studied it before actually starting. This means risk management, having a trading strategy that you have already back tested, and so many other things. Because I want you to think about it like this, right? If you can't make a profit with at least 2 or 3 trades, how are you going to make a profit with 8 trades or even unlimited amounts of trades? These are things you have to factor in, and when you kind of look back at it, you're like, you know what, maybe the PDT rule isn't that bad after all. But anyways, let's go into the second way of how to actually curve this, which is opening an account with another broker that is internationally based. Now, when it comes down to the PDT rule for American citizens or people just living in the States in general, the PDT rule is like a hard requirement. It's like there's no in between. It's either, yo, you're screwed, or like, yo, you're blessed. So because of this, what most Americans will end up doing is opening up an account with a broker that is placed within an international country, aka anywhere that's not the United States. Now, don't ask me what broker they end up going to, because our next point is going to clarify this up a little bit more. Because now you're probably wondering what happens with the PDT rule when it comes down with Canadians. And I got some good news for you. If you're a Canadian citizen or you're opening an account with a Canadian broker, bro, don't even stress about the PDT rule. We are living. We can have unlimited day trades no matter how many times you trade within a month. Bro, trade 700 times in a month, have negative P&Ls, but we're not going to be facing any consequences for actually doing this, other than our bank accounts either going up or going down. And this is why I'm saying don't ask me what brokers Americans end up going to actually curve the PDT rule, because I have no idea. Now, as we all know, there are a bunch of different brokers in Canada, a bunch of different brokers in Canada that we can pick from. So let's look at the PDT rule and its relationship with these brokers. All right, so first broker that we're going to be looking at is Interactive Brokers Canada. Now, Interactive Brokers overall is an American platform. And there's this little story that you guys probably won't know about because for some reason 90+% of you guys aren't subscribed to the channel, so be sure you click that. But anyways, I did make a video a while back about Interactive Brokers Canada and the PDT rule because I dug deep. I did a bunch of research and I found that on every page that had to do with Canada, Interactive Brokers, and the PDT rule, it explicitly said that the PDT rule applies if you're a Canadian. So I ended up making a video for it. I got completely flamed for it, and now this is why I'm making this video. So I just wanted to clarify this for you guys. If you are using Interactive Brokers Canada, don't worry about the PDT rule. I even paged one of their customer service reps and I'm like, bro, like, you can't have this be on the website and then everybody thinks that we're like subjected to the PDT rule. Whatever. Long story short, I closed my account with them, but you know what? Still a good broker. Now for Questrade, Wealthsimple, and all of the other brokers out there, when it comes down to the PDT rule, you are not going to be subjected to this whatsoever. So you're basically fine to do day trades. But I did want to tell you guys one thing. When it comes down to Wealthsimple trade, I don't really think it's day trading friendly, because there are certain things where it's just not compatible with what a day trader wants to do. Number one, they have a pretty hefty conversion fee, meaning that whenever you want to buy, for example, American stocks, or if you want to day trade with American stocks, you're gonna have to pay a 1.5% just to buy an American stock. And the same thing applies when you're trying to sell that American stock. You have to pay another 1.5%. And let's be real, as a day trader, getting 1.5% up within a trade is pretty unrealistic. Plus, you're gonna have to break even by getting 3% because you're paying 1.5% there and then 1.5% back. Maybe if you want to day trade Canadian stocks, it might make more sense. But then again, there's always these delays when it comes down to actually placing orders and bids and asks. And it's not really a day trading friendly platform. I think one of the most common questions that I get about day trading is whether or not the PDT rule is going to be applying if you are day trading within a TFSA. First things first, my dude, you can't even day trade in a TFSA. If you do day trade within a TFSA and the CRA catches you slipping, you're basically gonna lose all of the privileges that a TFSA could ever offer you. Losing these privileges is not gonna be for like a week or two or even 90 days. Nah, you're losing the privileges forever. And let's be real, when you put these on the scale of having tax-free gains for the rest of your life, or day trading for like a year or two just to make some substantial profits, I think I'm gonna go with the tax-free gains forever. Now, the PDT rule does apply when it comes down to day trading stocks and ETFs, but how about options, cryptocurrency, and Forex? Well, first things first, for options, when it comes down to FINRA and the New York Stock Exchange, they will consider trading options as day trading stocks, which makes sense because options are derivatives of stocks. So just keep in mind that even if you want to day trade options, the PDT rule is going to be subjected to you if you're living in the States. And another thing to note as well, if you are receiving option premiums, that is actually considered to be a day trade as well. So be very wary of this if you are planning on day trading options. When it comes down to Forex and cryptocurrency, the PDT rule does not apply with them whatsoever, which is probably why you see so many people day trading it in both Canada and the United States. So you could trade literally 935 times within one day and nothing's gonna happen to you. You're basically in the clear. Now, Z community, I hope you know what the PDT rule is now, its relationship with Canadian brokers, and what the PDT rule actually applies with when it comes down to different investments. Question of the week is, what are you going to be day trading? Are you going to be day trading stocks, ETFs, options, futures? Let me know in the comment section down below, and I'd love to hear from you guys. Now, thank you guys for watching this video. I'll catch you guys in the next one, Z community. This is me, Tamer Aziz, signing out. Peace.